So when we're looking at an IPO, we're always looking at it just as a normal investment. We don't necessarily treat an IPO as any different to a normal investment. So we're looking at things like the industry structure and the management track record and reputation. What are the opportunities to grow? And just what's great about the company and why do we want to invest in it? The things that we would love to see in an IPO are founder-led businesses, and when that founder stays in the business and continues to have a really good shareholding in the business. And then we really want to see as well the money that's being raised from the IPO mainly being put back into the company, and so we want to see that ability for the company to grow, not money just being sort of stripped out of the company. So the things that we tend to be quite cautious about are when private equity sells a business into the IPO market. So often, they're only there for a short time, so there's not a lot of responsibility there. And I guess we also often find with companies being sold by PE that they can strip costs out, and so you've got a business that needs to be reinvested in. So we're pretty cautious about that. Other areas that I'm also kind of cautious about is if there's a founder that's led the business and then all of a sudden before the IPO a corporate CEO has been put into place, and so therefore you can't really trust the track record of the business because you don't know what the new CEO is going to be doing. So if there's a change in management really close to the IPO, then that makes me pretty cautious as well. And I guess the other thing that can happen, and I really sort of look at, is if there's lots of pro forma adjustments in the P&L, in the prospectus, because I think that really kind of sort of goes towards lots of uncertainty in terms of what the real earnings are, and I think you can kind of manipulate things quite a bit when you do lots of pro forma adjustments. So that's another red flag for me. When it's a new company and a new listing, you just don't have the track record there, so you really are relying on management and the prospectus to give you a good feel for what's happening within that business, and so sometimes people are pretty good at spruiking sometimes, and so the promise that is being made to get the IPO away is not really doesn't really eventuate. So I think you've got to look at the prospectus and kind of make an assessment, I guess, in terms of how realistic are those forecasts, and really is the industry as good as what they're trying to make out, because they're definitely trying to sell their product. So you have to be a little bit kind of cautious, I think, and a little bit suspicious. I'm always questioning, is that realistic or not? I think as a house at Tribeca, and me personally as well, we just think there's so many opportunities in that sort of electrification of the economy sort of industry, and there's going to continue to be all sorts of great opportunities that are going to spring up, and that could be in the resources side of things or technology or infrastructure. So electrification and moving to a carbon neutral world is going to present so many opportunities. Speaking about the lithium stocks in particular, we do have an investment in a lithium company in the fund. It's called Core Lithium. It's done really well. We got it in a placement at 25 cents, and the share price now is 78 cents. I would say that there are definitely pockets of valuation excess, I guess, and even though the lithium stocks have done really well, just as much because lithium's kind of trendy, but also because demand has actually accelerated beyond what people were thinking about at the beginning of the year. But yeah, I think there is a degree of frothiness in the market in some of those stocks, and so you have to be very careful where you invest. Two of the biggest stocks in the portfolio are stocks that IPO'd at the end of 2020. One of them is a company called Playside Studios, which is a gaming development business. It is everything that I said before about what I look for in an IPO. So founder-led, the founder's still got a major part of the business. They've raised money since the IPO to continue to grow. All the money's going back into the business, and they're hiring lots of developers and just, I think, taking the world by storm. So they do both work for hire, and they also develop their own games. So they've recently won a contract for a company called 2K, which is a big gaming business in the US. I think it's got over $20 billion market cap. And they also do work for Facebook. And then in addition to that, they're developing some really interesting games by themselves. And if those games come off and they're starting to be monetized this year, then I think the company's worth a lot more money. And in addition to that, you've just seen Microsoft take over Activision, and it's put an absolute rocket under good gaming development houses. So I think PlaySide is in an absolutely fantastic position to continue to do really well this year. The second stock I really like in the portfolio is a company called Genus Plus. Like PlaySide, it has all the attributes we're looking for when it IPO'd, founder-led, and raised money for growth rather than taking money out. Started in Western Australia. It's a business that invests in poles and wires, electricity and communication. It's got really big contracts and a great reputation in the Western Australian market with Western Power and a lot of the big mining companies. They've used the money from the IPO to come over into the eastern states, and they've made some acquisitions over here. And the big kind of opportunity for Genus Plus is the fact that we are moving to electric vehicles, and the whole electricity network in the eastern states in particular is really old. It's over 20 years old, and it's run down, and it won't be able to cope with all these new electric vehicles that are coming into the economy. And so I've actually heard that if you've got a street and there's more than three electric vehicles, then the network can't cope with fast charging stations. So upgrades have to happen, and Genus Plus is in just a fantastic position to take advantage of that.